Hello guys, welcome again to another BTC video. I hope you are doing great today. Excuse the voice, I'm a little bit sick today, but I'm trying my best to upload the videos for you and to try to help you out, not panic out too much in the market, even though right now I'm guessing you're already panicking, and if I were you I would panic as well. But we have good news, we have bad news, and we're going to talk about all of them, and we're going to talk about the S&P 500 as well and the correlation between Bitcoin and the S&P 500, and I'm going to try to explain to you why the market crash basically happened. Now, to be fair, this is not unexpected, but the timing is. That's how I'm gonna leave it. I'm not gonna talk too much about why it's unexpected, even though if you go to my last video you can see why it's not unexpected, but the timing is really unexpected. I did not think BTC would do this right now. I was giving it slightly more time to do this, but I guess BTC wants to do what BTC wants to do. So I'm going to explain what I'm seeing in the charts. So let's go to the charts straight away. So we're going to talk first about the hourly chart, because I want you guys to pay attention to something very important on the hourly chart. Let me just show you. So we're going to go to the hourly chart right now, and we're going to see the dump that happened. If you are following me on Twitter, I actually posted a warning sign when we were around this area, telling people that be careful. If you see BTC around 43.5 region, this is gonna dump. Now, I took a short trade as well here, but I honestly did not expect this trade to go this way. TP was around 39,500 for me in my short, but this was honestly unexpected. I have to be truthful when I'm truthful. So number one, what I noticed because of the dump. Now, why? Let's start first. Why this dump happened? There's actually a couple of reasons why it's happening. The number one reason, in my opinion, stock market, and we're going to talk about the S&P 500. The number two reason that in my opinion, is making this market dump is basically liquidation games from the market makers or from the market itself. Now, what do I mean by that? Also, if you've been following me on Twitter, you probably know that I've been speaking about a similar scenario that happened here, but the opposite now, to the downside. So here, basically what happened is, market was around 60,000. People, including myself, were shorting there because 60,000 is resistance. It is not support. You usually short resistance and you long support. So you don't really buy at the top, right? You usually sell the top, and that's what the mentality was here at around 60. Now, luckily for myself, I'm an experienced trader. I know how to trade this. I know this is gonna go up a little bit more to kind of liquidate us, the people who are shorting here. So I was always getting in, getting out, getting in, getting out, just to be safe, and increasing my price through that mentality of get in, take some profits, close 75% of the position, price bumps, re-enter again, do the same thing, rinse and repeat, till I made more money going up than probably most people. But this is because I've been here in similar situations before in stock markets and in other types of trade. People, beginners, haven't seen this. But what happened basically right here is market makers liquidating shorters, bears, because bears were shorting, and then you had a squeeze basically to kind of eliminate a $10,000 pump, basically around $10,000 pump basically. And what's happening right here, so include that with the stock market crashing as well. If you include that mentality, and I posted this on Twitter, you were at $40,000. $40,000 was support, and this is what the market makers want you to believe. They want you to believe that 40,000 is a support, and they make you believe that by allowing you to get a few winning trades at that area. So if you see people longing 40 all the time and making money, because you see if you long 40, you'd probably make a lot of money in these longs. Every time the price dipped here to sub 42, you long it, you make money. So when the price dipped here, basically people were longing, but this is what happened after. And it's continuing to drop, not because, well, of course the stock market is really a key player here for this crash, but it's actually continuing to drop because of the same mentality that happened here. So because of the same idea that I'm talking about, the market wants to liquidate bears here, so people The price shot to 64, people shorted. The price shot to 60, whatever, people shorted. The price shot to people shorted. Till finally the market really liquidated them, basically doing this pump to a new all-time high at 67,000. Shorted, basically scared everyone, and then switched them to longers here. So now people started to long here. Oh, and started to buying Bitcoin at 60. And then what the market did at 69 is basically, bam, drop it again to liquidate the people who were longing. And it kept doing that. It kept doing that. So people here were so bullish on BTC of going to 100K by end of year that they kept longing at every single level all the way till finally Bitcoin reached this area. And I also posted another warning on my Twitter here for you guys as well, if you follow me on Twitter, saying that be careful if you see a retouch of 53, it's gonna crash. It's not gonna stay here. It's gonna drop because of the same mentality that I'm talking about. This mentality, this market maker mentality, believe me, it will help you so much in your trading, because it will allow you to take all of these trades and avoid this one right here and avoid this one right here. So that's my opinion. And that's why we keep dropping and dropping and dropping, because 37, Bitcoin was 40, 37. Oh my God, that's the key level. You long it, it crashes. 36, even myself, right? I told you guys on Twitter, 36.5 to 37K is a strong region of support for BTC. What happened after is a wick to 35.4. And actually I have orders at 35,500 that got filled, and now the price is around 36.33. What I'm doing is I'm closing my position around 75% of my position and putting my stop loss at break even, and whatever else happens. I'm already in profits and happy, and everything is okay. So if this crashes again, I have other orders down the road, so I can do the same process till finally I will catch that pump to the upside. Now, the pump will come at two levels, in my opinion, and I will speak about them now. But before I continue about speaking for the levels of the pump, one more thing to note is that the 1 hour EMA. So since the drop, the 1 hour 10 EMA, which as you can see here, has been acting as strong resistance. Every time the price touches it, it drops. Every time the price goes for it, it drops. Now that 1 hour EMA is around 36,700. So if at least BTC wants a chance to escape this drop scenario and escape this next level that you can see here on the chart, which is 34,200, which we spoke about as well, we need to close at least 2 hourly candles above this area. So if you see BTC starting to close around $37,000, at least 2 hour candles, then this downside will probably be escaped, and then you're probably going to enter a motion like this and then get rejected on the next EMA. That's basically it. So just be careful. Just be very, 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 very careful, because this market is out there to liquidate. It is out there to liquidate longers, bulls. They're going for the bulls right now. They're not going for the bears anymore. They need to clean the slate in both directions in order for the run to continue. So for sure, the bears have been liquidated a lot, most of them. They were given some chances. The proper traders, some traders, of course, made some profits here. We will go for them also. Don't worry. The market will not forget people who shorted here. But right now, the market is more focused on bulls, because no one's going to short at 37, right? A proper trader doesn't short support. No one's going to short at 36. It's crazy. You're shorting support. And that's why the drops keep happening, because people long here, another drop happens. People long here, another drop happens. So that's the whole idea of this happening. Now, one more thing of why this is happening, right? We said, in my opinion, it's liquidation games for sure. The market wants to liquidate the bulls, not the bears right now. We talked about the stock market as well. I'm gonna go to the stock market and show you. So this is the stock market, as you can see, and look at that. It looks super, super ugly. You have your crash right there in the stock market. This crash right now is around 10% crash, was a lot in the stock market. That is a lot, and you're losing key level of support. So I posted 2 days ago, there's this bearish divergence on the weekly time frame for the stock market. So I'm expecting something like this still to happen, but I wasn't expecting it to happen now. And I think this is just the beginning. Now, if this were to be avoided, and if this were to happen in June, like I stated, then the pull-up, because this will go back up again, needs to unreject this area. So it needs to break above resistance, which this support, which is now flipped to resistance. Usually when support breaks, it flips to resistance, right? But with the stock market, it's kind of different. So if the next high doesn't get rejected here and you form a new high, then this just going to continue again and again and give us slightly more time before the proper crash. But right now, 10% is a lot in the stock market. Usually big crashes in the stock market go up to 34%. But this one is, yeah, it's 9%, 10% is not bad. It's very, very severe in the stock market. And that's why this is happening. That's why the BTC price is also dropping. And by the way, the stock market hasn't even finalized yet. Just so you guys know. This is just the beginning of the crash. This is like, if this, like I said, if on the retest you cannot make a new high and you get rejected here, this is the beginning of a bear market for the stock market. So something similar to this, which basically 1, 2, 3, 4, 5, 6 weeks of downside, right? And we're just week number 1. And that's going to be a lot for BTC. That's going to make BTC crash for a long time, for an extra month before continuing upside to the upside. And if that happens, I have a major level to watch out for, and it's not $20,000, it's actually $23,500, and I'm gonna talk about them later for sure in the video. So I'm just gonna show, I just wanted to show you why the stock market or what was also influencing BTC as well. The stock market crashing is also influencing it. Now for Bitcoin, if you go to the 3-day chart, actually I don't need my indicators because it's very clear what's happening, but if you go to the 3-day chart, there's something called a volume profile, which is an indicator that shows you traded volume. Now this indicator has entered a region of support, so we are at support right now, we're not at resistance. As you can see, the levels are here, which are the peaks. These are the strong levels. It's sliced through this one, which is around 37,000, and it's sliced through 36,500, and then it wicked on this candle right here, on this small peak right there. You see that one? Sorry, this one right here. You see that one? That one is 35,400, and that's where it wicked. If we drop again, and if we get rejected from the 1-hour EMA again, which is the next coming hours basically, this will drop to here, which is around 34,500 region average. And that's gonna be the last line in the sand for BTC, like 34,500. Actually, I'll give it one more line, which is 32,000, which is the lower end of this huge traded area of trading volume. If BTC closes below or even touches $32,000, this is gonna go up, get rejected, and then drop again. And something similar, something probably like this, like that, and like that. There is a chance that it does this, right, or this, but in my opinion, it won't do that, because right now the trend is a bearish trend. So again, if you go to the daily time frame, we are in a downtrend, right? The macro is still intact, but like I said in previous videos, macro means a lot of weeks and months. So we could stay here chopping around 30 or even wick to sub 30 for a few months before having a proper upside, before having a proper rally to the upside, just because of the fact that you are in a downward channel. Now actually these are very bullish in nature. These downward channels, they actually tend to reverse. So that's the good news, even though you're hearing very bad news, is that we will have some type of bull trap to the upside. This is also looking like the end of a Wyckoff accumulation pattern formation, which takes 6. So now this is, you can call it a Wyckoff, and not on an hourly base, around 6-7 months of happening. Okay, now you can call it a Wyckoff accumulation pattern, but the ones that we used to see before, those are all BS. None of them work. But yeah, it's looking like it. Hopefully we consolidate here, wick to 32 and bounce, and we don't even touch 23.5. But right now I can't be sure. There's no way I can be sure right now, because in my opinion the bear market is here already. I wanted to wait for weekly close, but weekly close, which is tomorrow, and monthly close, which is next week. But I think at this level, we need a miracle. We need BTC to go $10,000 up, basically, to try to avoid a bear market based on indicators. Because on the weekly time frame, as you can see, I will show you my indicators. This is just getting started. This is still hasn't given me anything. And the monthly, of course, which is the most worrisome. As you can see, these are about to cross, and this is about to dip sub 20, which is all showing bearish momentum. But like I said, it's not the end of the world, because when these enter, or when this happens, right, when you enter a bearish downtrend or a bearish momentum, and this is one of the rules of trading, if your indicators are showing you downside, and they're showing you that you're in a bear market or a bear trend, and your price consolidates, then this is very bullish actually. Then what happens is basically the opposite. You have a pump, and this works on any time frame. So if on the weekly time frame for the next couple of months we chop around here rather than drop sub 30, then this will be probably your bear market bottom basically. But honestly, I don't think it's gonna happen. And I have my reasons, which I'm gonna explain here. So I'm sorry again for the video being too long, but I want you guys to get the most information out of it. Now, what else do we need to talk about? We need to go to the BTC all-time history index. So this all-time history index actually shows you the price of Bitcoin throughout ages, basically, right? What I want to pop is this one. Pop it out. Yeah, it is the monthly, right? Yeah, this is what I want. And then actually maybe pop this one out. Yeah, this is what I want. Exactly, this is what I want. So here's the thing. And this is up to you whether you want to believe it or you don't want to believe it, or it's all dependent on you. So this EMA right here, right, as you can see on the chart, and I'm going to show you which EMA is this, which is the third one, which is the 75 EMA on the monthly time frame. Usually BTC bottoms out on bear markets on that EMA. So it bottoms out here and it bottoms around here, which is around the EMA, basically around this 75 EMA on the monthly time frame. That's where the bottom, basically the bear market bottom, is at. Now this EMA is coming in around 18,300. So even though between 20,000 and 23,000 there's not a big difference, it's basically the same, just 5k difference, same stuff, right? I still believe that there's a potential for BTC not to even go there. Okay? So why do I think this? Well, actually there's two reasons. And the first thing that I'm going to talk about is why I think it will go there first. You can see this EMA also right here, which is very important. EMA is around $32,000. So that's why I'm saying the next level sub 34 is 32. That's the line in the sign for me. But why am I expecting this? The only reason being is what we talked about earlier, that everybody, as this drops, everybody's gonna long. Everybody knows that 30k BTC is a discounted deal. Oh my God, 30,000. We longed last time right there, and we made a lot of money. So we're gonna long again at 30,000 and make a lot of money again. And that's, in my opinion, why 30,000 will break this time, and then you're gonna see a potential drop to 23,500, and yeah. I think that will be it. If we do go to $20,000, that will be, in my opinion, a wick. But I don't think you close any candles around that area. I think liquidity will be bought up super, super fast and super, super quickly. That's my opinion. And this is the reason why because right here, we were not prepared for this, or we haven't had an experience like this before. Right? But now in the back of our memory, the market makers have already imprinted this level as a strong support. So it's gonna do the same thing, but before it breaks, it will give you one more pump basically around this area to tell you, or to at least to trap you more. Oh, okay, 30,000 is support. I made a lot of money here. Then it drops one more time to there, and then you long it again. But the next time it's gonna basically drop, liquidate you, and go to those sub 30k levels. And that's just my personal opinion, by the way. So that's what I see right now for BTC. On the next coming days and hours, like I said, till we break that 1 hour EMA, nothing's gonna happen yet. It's gonna keep dumping and dumping. Two levels to watch out for: 34.5. That's for me, like, there should be a proper bounce there. The second level will be 32.2 or 0.5, but that's the line in the sand. I don't think BTC will drop sub 32 if we reach it. I think there will be a trap first there, and then it will drop again one more time probably, and then maybe one more time, and then on the third time it will probably liquidate everybody who longs there. So that's just my opinion. That's what I see. Now, what if your bags are in red? Just hodl. You're in crypto for the long run. You're not in crypto for the short term. It is what it is. Keep with you some USDT to DCA in to lower your average price, and that's the best advice I could give you. One thing to note though is, let me just show you right there on the 3-day chart. Even if we dip to this area around 34,000, or yeah, around this area, because this is the support area right here. The last line in the sand is like 32,300. But even if we reach this area of $34,000, then expect a bull trap to happen. But the trap will take us, in my opinion, to as high as 50,000. That's the as high. But I don't think it goes. I don't think you close above 50. Okay. Technically, conservatively speaking, it should take you to around $46,000 or $47,000, and then drop again. But if you want to be unconservative, I would say you might potentially see 50, and that would be max pain in my opinion if you go there, because people will think, oh, we're going again, the runism, and then it drops again. So just be careful in my opinion. Your weekly EMAs, by the way, the ones that indicate whether a bear market is here or not, are about to cross. They're right there. So if we don't have a mega pump by Sunday or by next week and close above $50,000, similar to what we had here, because here they were crossing, and then we had our pump weeks. We started with our green weeks. So if we don't have mega pump weeks next week and we close above this area, these will cross, and we will enter a bearish market. And this bear market, I think it will be, at least in my opinion, less severe in time. So I think we will see lows like this area here around 23,500, but I don't think it will be long-lived. I don't think market makers will allow people to accumulate fast enough. There will be a V-shaped recovery and blast off after. But one more thing I want to talk about before I finish the video is that from macro perspective, this, even though you have broken support, even though whatever, right, you're still holding. Not holding, but structure wise, you're still good. So if you zoom out, your last low is 29. I've been talking about this for a while, and whatever low here you get is still a higher low. So on the macro, your structure is still untouched, as you can see, and you're making right there. It could be a channel, it could be a parallel channel, it could be a rising wedge formation. It depends how you place your lines, but either way, it is what it is. So seeing one more upside, the only problem is if you see one more upside, the top of the channels are also 69. So it's going to be like a triple top type. But in my personal opinion, structurally, BTC is looking still good. But the only problem, like we've been talking, this is the weekly time frame. It's not it's the 3-day and the weekly time frame. These are large time frames, and the macro is basically a lot of months to play out before it finally happens. Now, there's a chance that this will be. There's a chance. I don't want to be very bearish, but there's a chance that this does this. There is a chance. There's always a chance with Bitcoin. But right now, I cannot see it. Right now, I honestly don't see it. Unless I see other signs, unless I close above certain levels. There's a lot of resistance up here. We will have a trap for sure. Maybe that trap closes above certain key levels, which might take us back to the run. But till now, we don't know. So we have to wait. And I need the data to try to inform you to be as accurate as possible. I don't want to basically throw you hopium or BS out there. So yeah, guys, that is my prediction for BTC. That is what I see right now for BTC. Just be careful about the scenarios that I spoke of. This scenario of longing here with another drop basically happening here is very likely. People are not expecting 20,000 at all. People are expecting this to hold 100%. People will long here again. And just because of the mentality that I explained to you right now, this potentially might not hold. So if we reach that area, basically, if we reach that 32,000 region area and people start to long, it might work on the first long try. It might even work on the second long try, but the third, once you get to the second and the third, that's when you start to be careful, in my opinion, especially the third, because usually drops happen after they build your confidence first, and then they liquidate you. Anyways, guys, that is it for the video. I hope you enjoyed it. Please like, please share, please subscribe. Please make this channel grow so I can keep posting these videos daily and more frequently. Follow me on Twitter, link in the description below. If you want to inquire about my paid private Discord, my Telegram link is also in the description below. You can message me on Telegram. I'll probably reply to you very fast. Follow me on Twitter. Remember, I'm very active there recently. So yeah, I hope you're doing good, and I hope you're not that red, but just don't panic too much. Don't sell, even though you're red, and even though we enter a bear market, it's not even worth it, honestly. Just accumulate some money to buy the bear market lows and try to get rich other ways. There is other ways. Anyways, thank you guys for watching the video, and I will see you again next time. Bye bye.